Hello everyone, we're going to do some practice problems to help you with your Chapter 14 graded assignment. In Chapter 14, we're going to be analyzing customer sales, and not just in terms of quantity, like how much revenue we made off of sales, but also in terms of quality. And one thing that you can do to analyze your customers is to do a customer level operating income analysis. Every company has limitations. You only can make so much product. You can only satisfy the needs of so many different customers. So given your limited capacity to fulfill customer orders to make enough products to put on shelves for customers, you want to have the right mix of customers. You want to find the group of customers that are the most profitable overall. And in this example, we are going to be Mifflin Brantley Novelties. We produce desktop aquarium kits for children or immature adults, which we're going to call pond baboons. I'll spoof on sea monkeys here. This product has been a smashing success, and we have contracts to provide large amounts of this product to 5 major retailers, which is given here in the information as 5 and 10, Harry Teachers, Bullseye, J-Mart, and Colonel Parker's. We sell these at markup, but in order to make sure that our cash flow is sufficient, we offer very high discount levels if our customers pay us in a prompt and orderly manner. We sell these kits in cases of 25 apiece, and we have the following information to work with. We know how much we sell each case of 25 kits for. It's $200. We know what our full manufacturing cost is to make a case. That's $80. That is just production costs. That is our costs that go into making the aquarium kits, the pond baboons, that we ultimately sell to customers. But our customers cause us to incur other costs as well, like order taking. We need to get a hold of customers, fill out paperwork, make purchase orders, etc. And to do so, we have to pay our staff hourly wages or salaries to do their job function, to make those purchase orders, to come up with contractual agreements that we are going to have our customers sign. So order taking is a cost beyond the cost of production, as is product handling. Yes, we've made all of the kits that we're eventually going to sell, but we still need to store them in a warehouse. We still need to load them on trucks, etc. So each case that we sell to a customer, we assume is going to cost us $26 in product handling costs. After we sell the cases, we have follow-ups. We have customer support that we have to worry about, and our activity rate for that is $5 for each case that we sell to customers. And then lastly, if we're paying for our own delivery costs, which we're going to assume in this problem that we have to pay for all of the gas, driver wages, etc. that goes into getting these finished pond baboon kits, cases, from our production facility to the end user, our 5 different retailers. So for each mile that we have to travel for delivery, we assume it's going to cost us $3 in driver wages, in fuel, and maintenance and repairs on our vehicles, etc. So now we can take into consideration not just the cost of production, but also any associated period costs that are variable, can directly be attributed to things about our customers, how much they order, how frequently, how large the quantity of their orders is, how much they are going to need our customer support, and importantly, how far away and how often we have to go to make deliveries to these customers. We have a little more information that's going to help us fill out what we need related to our activities. The number of cases purchased for each customer, the discount rate that each customer took. Again, we give them discount terms for prompt payment, but it doesn't mean they have to take advantage of that if they don't want to. The number of orders that they made, which, as you can see here, there's not a huge correlation between the number of orders and the number of cases. Some customers probably only make a few orders, and they order a massive amount of pond baboons in each order, while other customers, they make frequent, smaller orders. So if they're making frequent, smaller orders, we have to fill out more purchase order forms. We have to pay more order taking costs. And then for delivery, what matters is, firstly, how often we have to go to that facility, and secondly, how far away it is from where we produce these goods. So we have the number of deliveries we made to each customer, and we have the miles per round trip that it takes to do a delivery to each customer. To figure out what one of our customers, for the lack of a better term, are our best customers, let's figure out how much each customer contributes towards operating income. And we're going to do this by making essentially an income statement, but breaking it down customer by customer. And the first thing we have is revenues at list. This is the amount of revenues we would have generated if we didn't offer any discounts to customers and they had to pay our full list price. Well, how are we going to find that? We can find that by taking the number of cases that we sold to each customer and multiplying that by the full list sales price. And let me go down here and make this just a little bigger for everybody so you can read it. There we go. So for 5 and 10, they purchased 30,000 cases from us according to our information. Our full list price on a case of pond baboons is $200. So if we did not offer them a discount and they paid the full $200 for each of those 30,000 cases that they ordered, our list revenues from 5 and 10 would have been $6 million. For Hairy Teachers, they ordered 20,000 cases of pond baboons. Well, our full list price is $200. So if they didn't take advantage of any of our discount terms, the full list revenues we would have generated from sales to Hairy Teachers would have been $4 million. For Bullseye, our largest customer, they ordered 50,000 cases of pond baboons from us. Well, if they would have paid $200 a piece, we would have come up with it's going to be $10 million in revenues. There we go. I want to take advantage of some Excel's functionality. In each one of these equations that we have here, I'm always taking the respective number of cases sold to each customer and I'm multiplying it by those $200. I want the number of cases sold to each customer to change because each customer bought a different amount of cases. What's not changing is our full list price. It's still $200. So if I go up into the formula bar, that information in cell B3, the sales price per case, that $200, always is the same in every single formula. I'm going to make that absolute. F4, or maybe function in F4, will make it happen. You'll know it's correct when you get the dollar signs around the cell reference. And now it's telling us that when we fill handle, we want the first cell to change, but the second cell is absolute. It's always going to be that $200. And now I can go and I can use that fill handle for tidier calculations and determine that J-Mart, if they had paid the full $200 per case on the 36,000 cases that they purchased, would have caused us to generate revenues of $7.2 million. And Colonel Parker's buying 14,000 cases at $200 a pop. If they paid full price, our revenues from that customer would have been $2.8 million. But they didn't, because we have discount rate taken. What percent of the full list price of revenues did we give as a discount to each of our customers to encourage prompt payment? How am I going to find that? I am going to take our revenues at list and multiply it by the discount percentage, the discount rates taken. So 5 and 10 could have generated $6 million in revenue, but we gave them 15% off, and 15% off of $6 million is a $900,000 discount. For Hairy Teachers, we could have generated $4 million in sales revenue had we sold everything at list, but we didn't because they took advantage of a 12% discount. And in this particular formula, let me go back and get my cell reference up here. Every time that we do calculations, we're always going to multiply the revenue at list for that customer times their discount rate taken. So if we slide over to the right, both of our inputs are going to slide over one to the right. I don't need to make anything absolute. I can just use the fill handle to bring it across, and we see that 10% discount given on $10 million of list revenues for Bullseye means we gave them $1 million in discount. J-Mart over here had $7.2 million of list revenues, and since they didn't take advantage of any of our discounts, they had a 0% discount rate taken, they got no discount to subtract out. And Colonel Parker's got 10% off of $2.8 million in revenues. That is a $280,000 discount. So what were our actual revenues? Our actual revenues are just revenues at list minus the discount. We gave 5 and 10 $900,000 off of what could have been $6 million in sales revenue, which means the actual amount of sales revenue that we generated was only $5.1 million. We gave Harry Teachers $480,000 off of what could have been $4 million in sales revenue. So our actual revenues generated were $3,520,000. And again, I want both of these inputs to change so I can just fill handle without making anything absolute. Bullseye, getting $1 million off of $10 million of list revenues means they actually only caused us to incur or generate $9 million in revenues. J-Mart's revenues at actual are exactly the same as the revenues at list because they didn't take advantage of a discount. And Colonel Parker's got $280,000 off of what could have been $2.8 million in revenues. So our actual revenues realized from that customer is $2,520,000. Now that I know what our actual revenues are, I can subtract out our cost of goods sold, and it gives us our gross margin, the amount of profit that we made from each customer, taking into consideration only production costs. So how do I figure out what the cost of goods sold that we would recognize for sales to each customer is? I would take the number of cases sold, and I would multiply it by the manufacturing cost per case. We sold 30,000 cases to 5 and 10. Our information up here tells us the full manufacturing cost per case is $80. So if we paid $80 to make each one of those and therefore got to expense $80 on each case that we sold, and we sold 30,000 cases, that would have resulted in a $2.4 million cost of goods sold expense being recognized for units which we sold to 5 and 10. For Harry Teachers, we sold them 20,000 cases. Each one cost us $80 to produce, which means the total cost of manufacturing goods which we sold to Harry Teachers is going to be $1.6 million. So same deal here. The number of cases that we sold to each customer, the number of cases that each customer purchased, if you want to flip perspective, changes respective to each customer. What doesn't change is that our full manufacturing cost is always going to be $80. So I'm going to go back into my formula bar up here, and I'm going to make that $80 in cell B4 absolute. Throw some dollar signs up around it, and now when I fill handle, it's going to move the first input, but it's always going to keep that $80 consistent. So selling 50,000 cases to Bullseye, with each case costing us $80 to make, means we spent $4 million in total to produce goods which we sold to Bullseye. For J-Mart, 36,000 cases at $80 a piece means we spent $2,880,000 producing pond baboon kits which we sold to J-Mart, and the cost of goods sold by that same methodology, 14,000 times 80, for Colonel Parker's was $1,120,000. And now I can find my gross margin. Like you always find gross margin, it is revenues at actual minus cost of goods sold. So we generated $5.1 million in revenues from sales to 5 and 10. In order to make those sales, we had to produce those pond baboon kits. So those kits that we sold to 5 and 10 cost us $2.4 million, which means the amount of profit that we made from 5 and 10, taking into consideration only the cost of production, is $2.7 million. I want both of these inputs to change, so I'm just going to fill handle. I don't have to make anything absolute. Harry Teachers, $3,520,000 of revenues, less the cost of goods sold of $1.6 million, means our margin from that particular customer was $1,920,000. We made $9 million in actual revenues off of sales to Bullseye, but the goods that we sold them cost us $4 million to produce, which means our margin, our markup, if you will, on sales to that company was $5 million. J-Mart's gross margin was $4,320,000, and the gross margin for Colonel Parker's was $1.4 million.